Hey guys, Boris from BK Forex. Welcome to our screen very carefully to understand all the risks associated with trading on margin and to seek advice from an independent financial advisor if you have any doubts. Okay, let's start today, I think, with the Aussie. In some ways, quite interesting, and we're now coming up right straight into the Asian session open with the Australian GDP. Aussie has clearly made what appears to be a relatively significant bottom here at 90.50. We've had about 1, 2, 3 days of no forward action where we haven't made any fresh lows really beyond the 90.50 that was made a couple days ago. The critical thing now, though, of course, is this 91.50, which has been the capping level to the upside. If that level can be broken to the upside, then we have a reasonable chance to take out 92s, to go towards 92s. 92 is a very significant resistance level. It still has highs from August over here that could weigh on it. But a curve back up in Aussie, as we talked about, is a very interesting trade to the upside, assuming we have supportive data. This is going to be a critical thing. If the data is quite negative, we could have a bust back up and a retest of the 90.50 support again one more time. But certainly today, the price action was relatively bullish. Post RBA basically testing the lows and ending up on the highs looks to be a very decent turn candle. And it brings us to the idea that we talked about yesterday, which is the Euro-Aussie trade, which I like to the turn side. We talked about the idea of Euro-Aussie turning at 150 here. And today it's sort of flamed out up and down. But the key level here to the downside is going to be the 48s. If we break the 48 to the downside, we have a very reasonable chance to now unwind all the way out to the 45s. So Aussie strength may be coming back in vogue despite all of the selling pressure that's been thrown at it over the last couple of weeks. Dollar yen was the other interesting trade today, and that was an interesting trade the other way in the sense that we had a very, very ugly reversal candle here above the 103.50, 103.30s. We basically touched the highs, came right back down, then tested the 102s. Now, the candle really, in and of itself, is not as negative or as ugly as it looks. It basically can be simply a pause and a corrective candle. The thing that will make it very negative is if we break the 102s to the downside here. If we go to 101.80s or somewhere around there, that would be a pretty negative construct because that would suggest that, yes, this is a topping candle, and we may be looking at 101, perhaps even 100. If we have negative U.S. data tomorrow, negative into the NFPs, and the idea that a delay of taper is what's on everybody's mind. On the other hand, if we can come back and recapture all of this, most importantly, if we can recapture this back up to the 103.30s, that would be a very, very bullish sign and suggest that we can go towards the yearly highs at 103.60s. So depending on how we trade today, going to be very interesting to see how it plays out. I think probably most of the trade, of course, is going to happen in the U.S. session. We have the ADP and ISM services that could give us a very good clue as to just how strong or weak the economy is coming out of the October debacle with the government shutdown. So very interesting in many ways. The fact that yen really came under some very heavy profit taking. This is really going to be the test of whether this was profit taking or the final hurrah of the longs for the time being, and maybe a turn in the trade. As I said, a real true turn in the trade really doesn't materialize until and unless we break the 102s significantly. So it's got to see 101.80 somewhere around there in order for us to get interested in the possible downside. Similarly, the change of trend is also playing itself out in the pound here. The pound certainly looks like it's pausing here. I mean, this 64.40 is a capping at level. We try to break it through today, could not quite make it above those levels. But again, if the pound can recapture, the pound can take out 64.60 or somewhere around there, the move towards 65 becomes very, very probable. So cable is also on the cusp of either a correction or a pause in the uptrend effectively and a push higher, or setting in a top here. The 64.40 is the operative level, the critical level that we need to see taken out to the upside. If it can't be taken out today and we start drifting lower, then the break below the 63 will really confirm the fact that this is a topping out formation. The fact that we have two kind of hovering dojis, kind of two shooting stars, generally is not a positive sign for cable bulls. It suggests hesitation and lots of profit taking at those levels. But that profit taking can be overcome within a heartbeat if we get positive data and a push higher. So very much worth watching here as the night develops, because we're certainly at the cusp of possible turn or continuation in pound. Last thing I kind of want to look at, we don't really look at oh, I didn't even look at the euro, so I'll come back to the euro. But we don't really look at the caddy too often. But caddy made yearly highs today, so that's interesting, and I think it's worth watching. And I think if you're trading weakness in caddy along with potential weakness in the yen, the interesting thing that looks potentially, let me see if I can pull this up here, worth taking a look at because it's made another very ugly turn as well, was the CAD yen cross, which came down here significantly. Let me pull this back up down to this frame. Also, very ugly, sort of touched the upside, came back down. The only thing that sort of preserves this validation is the fact that the yen, as I said, not quite liquidating. But if the yen starts to break down below this 102 level, the CAD yen cross really looks in danger of unwinding all the way out to 95s, because you have the weakness in the caddy combined with the weakness in the yen to give us a double whammy of downside price action. So lows over here, what they're probably, where are my lows? Let's see. The low is 95.73. That's going to be the low you want to be pivoting off of. So basically, break, let's say, to 95.50 really opens up a very, very strong move towards 95, possibly even a test of 94s in CAD yen on the cross action. Lastly, let's take a look at the euro. Euro has just kind of been very, very quiet. It still maintains this 36.25, 35 zone, and we're just churning and churning and churning within it. But within that zone, we remain relatively well bid. It's going to be interesting to see, what happens tomorrow with U.S. data, whether that gives euro the boost. The key level for euro to overcome is 36.25. We've got to take that out. If we can take that out, that really puts us back on the path of 37, which of course can get reversed right back again if we have ECB on Thursday. But for the time being, next 24 hours, the key upside level to pivot off of is 36.25. To the downside, it's the 35 level that is the big support. And we'll see if they're going to try and test that to the downside if we get some dollar strength as the night goes on. So that's pretty much how everything shapes up. Wishing you guys the best of luck, the best of trading. Boris Osberg, over and out.